Good day. Ira Epstein of Linn & Associates with your SPDR ETF wrap-up for this Monday, October 19th, 2020, getting on to 5:40 p.m. Central Time. You know, if you looked over the weekend, you didn't see me do any financial wrap-ups. Didn't want to this weekend. I'll be back on my schedule with any luck this Friday, where they'll all be out again on Fridays, and then my subscriber videos, the weekend edition, which are long-term trading with very specific recommendations using weekly charts rather than daily charts. I'll get those done probably on Saturdays early in the morning. Why? Well, it's getting colder. Number two, at my house, I found today is the first day since July that we actually have a sink with water and a dishwasher that works. I'm laughing about it. I'm still married, which is the most amazing thing. And I did a lot of this work myself. All right. I love doing it. It's my hobby. It gets my brain off the market. So where are we? Well, you're dealing with massive, massive increases in COVID-19. It's back with a vengeance. So we're going into a third peak. The second thing is you're still worrying what is going on with COVID relief bill. Got to be worried about that. Is it going to happen or not? I personally like the fact that even at the last minute, Mnuchin and Pelosi are talking to each other. I think that's real important. You know, if they could reach a deal, that doesn't mean that it's there because the president still would have to sign off on it, getting his Republican Party to agree with him. I don't know how that would exactly work. You know, let's assume he couldn't get the majority there. But what about the Democrats in the Senate? Would there be enough? I don't know. I claim I don't know. So you've got that coming together. And of course, the election. That's, as of tomorrow, 2 weeks away. And I'm going to repeat, I don't buy for 1 second that on election night you're going to know what's going on unless the Biden camp does not win these key states that it needs. That would be the only thing. But even then, how do you know? There's so many mail-in votes going to happen. I don't know about you, but I'm not going to go stand in line, not with COVID, in the city of Chicago going crazy, and we may go into a lockdown again this week. They're talking a stage 3 and then maybe the lockdown stage. So it's really picking up in a terrible way. The hospitals are bracing for an onslaught that they're already starting to get. All right. Today we were strong most of the day in the stock market, and then after about 12:30, you could just see it. The market ran out of upside momentum and started slipping back, and after 1:30, I'm talking Central Time, the momentum really kicked into the downside. And that's what we saw taking place. So let's go and see what's going on. We have filled the gaps in the chart. There's none left. But when you look at a pattern, it's bearish right now. You have a pattern of lower highs and lower lows in XLK. Until the market takes out 122.63, this pattern doesn't go away. It can change as days go on and we get more numbers and more lines on the chart, but that would just negate the downtrend. It would not start an uptrend. Where could the market be heading? Well, the way I teach charting, and I do teach it, and you can go to our website at www.iraepstein.com under the word education. It's all explained there. The 18-day average is what I call the line in the sand. Markets like neutral spots. It's no different than North and South Korea. They get that buffer zone, and in it, anything can happen. Well, that's what happens here. If you go back to an 18-day average, it's like the market says, what am I going to be when I grow up? Do I want to be bullish or bearish? I wouldn't be surprised if you go down to that number. In terms of where the resistance came in, I think you'd agree with me. Right back here, we had the resistance as we started coming up against the upper Bollinger Band. You got over it, and then you started falling back, and you had one shot at it. And that's typically what you get. Then the market started weakening, and this is where you're at since then. One of the things I teach is the first time you hit a Bollinger Band, take some money off the table. Doesn't mean I'm right. That's what I teach. Did it here, you had another opportunity in an uptrend to keep buying. Well, here, now you're not in that uptrend, but if you didn't get out on that 48-hour period, you're really sorry at this point. Momentum. This is a problem. Here's how I view this. The slow stochastic study is a momentum oscillator that differs greatly from RSI, MACD, many other types. And there is a fast stochastic, a slow one. There's different ways to work with them. You can use exponential numbers within them. You can use flat numbers. There's many different ways to go with it. In looking at it, when you lose the reading, it will be with the red number closing back under 80 after both numbers have gone sideways for several days or more. Unless you get it back right away, this is the day that you got to be careful. You come back up on Friday. This, to me, is where the pros were going short, and again this morning doing it. Because the odds favor that after 2 days of losing it, that price and the closest moving average, in this case the 18, are going to make a run at each other. And that's what I think is going on right now. SMH, I see the same pattern, or do I? Let's go back. On Friday, you did not lose the embedded reading. You lost the reading today. Therefore, if this market's going to be a trap for the bear, you got to get over today's high. Why? You have an outside day down today. On an outside day down, if you take it out, that gives you an indication that the market's going to make a run for the upper Bollinger Band, a pretty strong indication. Don't take that out and keep the embedded reading down. You join the path that you're coming back to that number. That's how I'm reading the chart. On XLI, you still have the embedded reading. So it's none of that. Until the red line closes under 80, the bulls are in control, and they're probably still buying this market until they see that they've lost control. Target, probably the upper Bollinger Band, but new problem. That was the objective. Now you have an outside day down. That outside day down in front of it will be their new objective. Why? Because the odds of taking that out within the next 2 trading sessions are small. Outside days, up or down, generally don't see reversals of them within the next 2 days after they're made. Go in and do your own homework. I've done mine for 50 years, so I know from what I speak, and I believe in what I'm speaking. XLE, the energy sector, this is in a downtrend. Still looking for the lower Bollinger Band. Momentum down, bias down, trend down. To negate this, you got to take out Friday's high, which is 30.87. Don't take that out. 29.08, the lower Bollinger Band, potential target. QQQ, what'd you do last week? This was Thursday's action. Thursday, you lost the embedded reading. Came up on Friday. Unlike the other markets we just looked at, this already had it lost coming into today. I think the bears are aggressive in this then. And you can see what they're doing. I think they're trying to drive it right down there. You have the same thing in the emerging market. If you come back here, did we ever get to an embedded reading? I don't think you did. Both numbers were over here, not over here, over 80, over 80. They were 3 days in a row. I am wrong. Now, if you lose that, and you lost that on Thursday, you already went to the 18-day average. Not much I could tell you. This doesn't mean anything to me right here. What means something to me on the chart? As we're looking at it, we have an outside day down. If on Tuesday or Wednesday, the high of today, which is 65.17, is taken out, the odds favor that price and the upper Bollinger Band are going to make a run at each other. Barring that, you're already at the numbers that the market had to hit. And you're not in a downtrend per se because you're over the 18-day average, which means bias is up. GLD, I have no idea what to do with gold on this. This is just drifting against that 18-day average. You have momentum down, you have the bias up and the trend up. Everything's not in agreement. You had one shot when you hit the upper Bollinger Band on GLD, and you know what I teach. First time you hit it, you got to take, in my opinion, doesn't mean I'm right, money off the table. And I'm assuming you're long if you're hitting the upper band, and I am assuming you're short if you're hitting the lower. There's many reasons, and that's taught in my charting course, but you hear me talk about that. Now you don't have a trend. You have a lower low, a higher high, you're fighting 2 moving averages, the 100 and the 18-day average, you're neutralized right here. TLT. Do you want to fight with the 200-day average? That becomes the big fight. I don't think so. You also have a pattern of higher lows, higher highs, but you have the bias down and momentum flat. I'll let somebody else figure that one out. Last for this round of charting, lower low, and with today's action, a higher high. You stepped out of the trend in the euro currency. The euro, as you know, got fairly strong today against the US dollar. And in that strength, what happened, you saw the dollar get weaker, but by day's end, when we saw the break in the stock market, the dollar came off its lows by about 25 points or so. Now we'll see what's going to happen. You know, you watch me talk here, but do you know how to work with all the things that we're talking about? These are our guide to technical indicators, 2 volumes, volumes 1 and 2, showing you all the different parts here that we talk about. Now, there's Gann, there's Elliott in this. It explains it, money management, options primers. I think all the things you need to, get an understanding of this, and maybe even a refresher. So many good traders forget the refreshers. How do you get it? It's really simple. You're going to go to our website under free offers. Under them, you're going to sign up for it. We're going to send you a PDF. You can print it, you can read it, whatever you want to do. It's yours and it's free. I'm Ira Epstein. You have a great day and I'll see you tomorrow.